Howdy, Jacob here. Today we're looking at Pinnacle West Capital Corporation, ticker symbol PNW. It is in the electric utilities industry. We're looking at $8.4 billion market cap with a $16.5 billion enterprise value. Looks like through its subsidiary, they provide retail and wholesale electrical services, primarily in Arizona. It currently has a 4.7% dividend yield. As for growth, not a whole lot of growth, but likely growing with inflation. Margins, looks like there's a hidden margin in 2022, but outside of that, low 20s. And then again, hidden margin on gross margin as well in 2022, but otherwise low to mid 40s. Let's look at that balance sheet. That net debt was pretty substantive. So $5 million in cash on hand and $7.7 billion in long-term debt. It's a lot of long-term debt for the liquidity that they have. So if lenders were to come and say, "Hey, we need this money now," that could be troublesome for them. Let's look at the cash flow. Oh man, all right. Another quick video, but I got to do them just so people learn why these type of companies frustrate me. So negative free cash flow. We see a 1.1 billion in cash from operations over here, 1.2 billion, relatively flat over a 10-year period. And then their capital expenditures, because their revenue, this is a company that likely cares about revenue growth and maybe earnings and such. Their capital expenditures have grown well above their cash from operations. And in fact, the last 5 years, they do not have one single year. Oh, just kidding. 2018, you got me. 99 million in free cash flow in 2018. Otherwise, 2017, 2019, 2020, 2021, 2022, they do not produce positive free cash flow. And so the way that they fund these dividends can either be through issuing a stock or issuing a debt. And you can see that it has 100% been issuing debt. They issued 74 million in 2013 and then positive every single year, to where in the rolling 12 months they've issued $1 billion. Silly me. Which you can see that their long-term debt in 2012 was 3.2, and it's up to 7.7 billion in 2022. And so me as a lender, I would care about free cash flow. Earnings, have depreciation, amortization, don't care about capital expenditures as much. And so to me, yeah, they can't afford this dividend. They're just going into debt to fund a dividend because their free cash flow is negative. I'm just going to get to it. It's not going to be pretty. Again, they can't afford it. They'll probably grow with inflation, maybe 12%. They don't have free cash flow, so let's do 2, 0, 13, 13, 15. All right, I'm not going to go too much into this. For assumption-wise, it's saying that company stock price would have to fall 79% before you get a 15% return. Given these assumptions, to me, they don't produce free cash flow. I invest in businesses that produce free cash flow. If we're looking at funding a dividend, it's through your free cash flow. And so if you have negative free cash flow, you either have to issue shares of stock or issue debt to fund that dividend, and they are just issuing debt. And there's going to be a time where the lender calls that money and they don't have the liquidity on hand to cash it, and they don't produce positive free cash flow for that to be able to fund the lender back. And so they will have to sell off parts of their business, which will then hinder their growth. And that's not what I want to see from a business. I want to see an outlook that I can see for the next foreseeable future, maybe 5 to 10 years. And I want it to make sense to me. And to me, a business that doesn't produce free cash flow and yet still sends out a 5% dividend yield through, issuing debt doesn't make sense to me. So I hope, although it was a short video, I hope people learned something. And sometimes it is this quick. You can just see a stock, look at it for a couple minutes, and be like, "It's not for me." The balance sheet doesn't make sense to me. The free cash flow statement doesn't make sense to me. The dividend doesn't make sense to me. The business doesn't make sense to me. Whatever doesn't make sense to you, you don't have to force it. So thank you and have a good rest of your day.